On July 10, 2025, Reuters reported that the White House had threatened its closest ally, Canada, with a crippling 35% tariff. 2 days later, a similar 30% threat was issued to the European Union and Mexico. The reaction was immediate and brutal. As markets reeled, the world's 7 largest tech companies alone lost nearly $2 trillion in value in just 48 hours. This wasn't just a trade dispute, it was a declaration of economic war that forced America's allies to make a choice: capitulate or build a new world order without the United States at its center. How did a series of tariff threats trigger a $2 trillion market crash and a plan to permanently reroute North American trade? To understand the seismic shock of July 2025, you must first understand the world that came before it. In the decades following World War II, the United States built a global economic order based on a simple but powerful idea: shared prosperity through free and open trade. Under frameworks like GATT and the WTO and regional pacts like NAFTA, goods, capital, and services flowed with increasing freedom. This system, guaranteed by American power and predictability, created unprecedented global wealth. The transatlantic relationship with Europe and the continental partnership with Canada and Mexico were the cornerstones of this order. It was a world where a European Airbus was built with American engines, and a Ford truck was assembled with Canadian parts, all seamlessly and without political interference. But the foundation began to crack under the America First doctrine. The Trump administration started to view this intricate system not as a strategic asset, but as a series of bad deals that had harmed American workers. The language of partnership was replaced with the language of competition and deficits. Unilateral tariffs, often justified by invoking obscure national security clauses against close allies, became the preferred tool of statecraft. This injected a toxic element into the global economy: radical uncertainty. For companies in Canada, Mexico, and Europe, the core assumption of the post-war era, that the U.S. was a stable and predictable partner, was shattered. How could a company invest billions in a new factory if its access to the world's largest market could be cut off by a single presidential decree? The trust that had been the bedrock of global commerce for 70 years began to corrode, forcing America's allies to quietly start drafting a Plan B. The quiet planning for a Plan B was forced into the open by the ultimatums of July 2025. On July 10th, the Trump administration sent a diplomatic shockwave across the northern border, delivering a letter to Canadian Prime Minister Mark Carney. As first reported by Politico, the letter announced a blanket 35% tariff on all Canadian goods, effective August 1st. There was no negotiation, no off-ramp, just a deadline. 2 days later, the strategy expanded. The White House issued a near-identical threat to the European Union and Mexico, this time with a 30% tariff, also set to begin on August 1st. It was a stunning escalation, a declaration of a multi-front trade war against America's largest and closest trading partners. The stated goal was to force a total rebalancing of trade relationships and to strong-arm allies into concessions that the administration believed were long overdue. The tactic was pure economic shock and awe, predicated on the belief that the U.S. economy was so indispensable that its partners would have no choice but to buckle under the pressure. The immediate reaction was not capitulation, but chaos. Global financial markets, which had been jittery but hopeful that a grand bargain could be reached, went into a freefall. The sheer scale of the threatened tariffs, hitting trillions of dollars in annual trade, was too much to bear. In a brutal 48-hour period, global stock markets hemorrhaged value. According to Reuters, the Magnificent Seven, the tech giants that had propped up the U.S. stock market, lost a staggering $2 trillion in market capitalization. It was a wipeout of historic proportions, a clear signal that investors saw the president's move not as a masterstroke of negotiation, but as a reckless gamble that threatened to plunge the global economy into a deep recession. The currency markets reflected the same panic. While the US dollar briefly strengthened as a safe haven asset, the Canadian loonie and the Mexican peso tumbled, as currency traders priced in the devastating impact the tariffs would have on their economies. As one analyst on Breaking Views noted, the market was caught in a painful paradox. Many believed Trump would ultimately back down to avoid a full-blown crisis, but no one could afford to bet on it. Faced with the same existential threat, America's allies chose two very different paths of resistance. Canada and Mexico, bound by geography and the integrated USMCA, opted for audacious defiance. Prime Minister Carney and President Sheinbaum accelerated their plans for the Northern Corridor, the $120 billion trade route designed to surgically remove the United States from their bilateral supply chain. The project, as detailed in logistics trade publications, was a direct response to America's weaponization of its geographic position. The U.S. handles an estimated $144.8 billion in goods transiting between its two neighbors every month. By rerouting even half of that traffic through expanded Pacific ports and a dedicated north-south rail line using independent blockchain customs clearance, Canada and Mexico could not only avoid the tariffs, but also starve the U.S. of tens of billions of dollars in annual logistics and customs revenue. It was a long-term structural response, a declaration that they would no longer allow their economies to be held hostage. The European Union, with a more diverse and less geographically dependent economy, chose a path of tactical negotiation. The EU's biggest concern was a potential tariff war in the aerospace sector, a deeply integrated industry where American giant Boeing and European consortium Airbus are both partners and fierce rivals. A 30% tariff would have been mutually assured destruction for this critical industry, in a move that demonstrated a deft understanding of the White House's priorities. The EU negotiated a separate peace for the skies. As reported by Reuters, they reached an agreement with the U.S. to maintain zero tariffs on aircraft and parts. This saved the estimated $43 billion in existing and future Boeing orders from European airlines that would have been jeopardized, a massive win for a flagship American company. In exchange, the EU accepted a 15% tariff on many other goods. It was a strategic sacrifice, accepting some pain to protect its most vital and integrated sector, while simultaneously exposing the internal contradictions of the America First policy. The divergent responses from its allies plunged the White House into a strategic nightmare. The plan to isolate and pressure its partners one by one had failed. Instead, the U.S. now faced two distinct crises. In North America, its neighbors were actively building a future without it, a move that threatened permanent, long-term economic damage. In Europe, the EU had outmaneuvered them, securing a deal that protected its key interests while leaving the U.S. to deal with the broader inflationary consequences of its own tariffs. The administration was now trapped. If it followed through with the 35% tariff on Canada, it would accelerate the flight of trade to the Northern Corridor. If it backed down, it would look weak and ineffective. If it imposed the full 30% on the EU, it would violate the aerospace agreement and trigger an immediate, devastating trade war. The attempt to project strength had resulted in a loss of control, leaving the U.S. reacting to events rather than shaping them. For Canada and Mexico, the crisis, while perilous, became a powerful catalyst for economic transformation. The Northern Corridor project, a monumental undertaking, was no longer just a contingency plan. It became a national priority in both countries. The estimated $120 billion investment promised to create tens of thousands of well-paying jobs in construction, engineering, and logistics, sparking an infrastructure boom. More importantly, it represented a psychological break from the dependency on the U.S. market. As Prime Minister Carney stated, while a no-tariff deal was unrealistic, Canada was now fully committed to restructuring its economy to reduce its vulnerability. This meant actively seeking new markets for its goods and investing in domestic processing to move up the value chain. For the EU, the aerospace deal was a major victory. It preserved thousands of high-skilled jobs in Germany, France, and Spain that are tied to the Airbus Boeing supply chain. The crisis reinforced the European strategy of using its unified market power to negotiate from a position of strength, even if it meant making tactical concessions in other areas. The overarching result for America's allies was a forced diversification, pushing them to build a more resilient and multipolar global trading system, one where the U.S. was no longer the only game in town. In the United States, the fallout was not strategic. It was simply pain. The threat of a multi-front trade war sent a chill through the entire economy. A sobering analysis from the Yale Budget Lab projected that if the tariffs were fully implemented, they could permanently shrink the U.S. GDP by 0.5%. That's a staggering $135 billion in lost economic output every single year. The model also predicted the loss of over 641,000 American jobs concentrated in the very manufacturing and agricultural sectors the tariffs were supposed to protect. The impact on the ground was immediate. The construction of the Northern Corridor threatened to siphon away an estimated $125 billion in annual trade-related revenue from the U.S. economy, devastating logistics hubs in the Midwest and border states. The auto industry, a bellwether of American economic health, faced the prospect of crippling parts shortages. Meanwhile, the $2 trillion market crash wiped out a significant chunk of the retirement savings of millions of ordinary Americans. The policy designed to make America stronger was, by every objective measure, making it poorer, more isolated, and less resilient. And so, North America stands at a crossroads it never anticipated. A presidential gambit to rewrite the rules of global trade has backfired spectacularly, wiping out trillions in wealth and forcing America's closest allies to build a future that bypasses the United States. While Europe negotiated a tactical truce to protect its interests, Canada and Mexico embarked on an audacious plan to reclaim their economic sovereignty. The United States, having initiated the conflict, now finds itself increasingly isolated, facing the prospect of diminished influence and a self-inflicted economic slowdown. In the race to define the future, will North America win together, or will all three sides lose trying to go it alone? Are you American, Canadian, or Mexican? Share your story and your perspective in the comments below.